What is going on, traders? Another trade review for you guys today, going over my exact strategy, what I did to take this trade. You guys love these videos, especially the more recent ones where I'm focusing on smaller accounts and making sure that smaller accounts don't feel like, they need large balances in order to make good trades. And not every trade is going to be a home run. This one, we made 40% on Tesla puts. I mean, 40% is really nothing to thumb your nose at. So I'm going to show you exactly why I took the trade, how I set it up, how I picked the strike price, how I picked the stop limit and exit points as well. This was a trade that we sent out live in the academy this morning. So let's get right into it.
All right, guys, back at my desk. Let's go over this trade. So the trade, as I said, was on a Tesla day trade. It was the 155 put. I'm going to show you exactly how I took this trade, how I framed it, why I entered it, and how is it that we made 40% on this. Again, this is a small account friendly trade. It only cost us $1.02 or $102 per contract to enter this put. So let us talk about it. As you can see, I sent this out at 7:19 a.m. or 10:19 a.m. Eastern. And by the way, if you guys want access to all of my day trades, my swing trades, all of the long-term stock analysis, you want access to the chat with thousands of traders talking about strategy and setups all day, every day, from before market open until after market close. We opened up monthlies by popular demand. Check that link in the description. Sign up for the monthlies. A lot of you wanted a slimmed down membership. Obviously, you don't get access to the courses. You don't get access to the mastermind calls, but you will get access to all of the chats and alerts. So as I said, I entered at 10:19 Eastern, 7:19 Pacific time, and it was after this candle here. So basically what I did, and this shaded area is pre-market, and what I always do, and if you guys follow the masterminds, if you guys join the masterminds, you know this, but I mark out the pre-market high. I mark out the pre-market low. These are levels that normally get reacted to. Obviously, the opening price is also a level that gets reacted to here. So why did I take this trade? Well, on market open, I basically saw that, Tesla was falling below the pre-market low. And after a few candles, we created what is called a fair value gap. Now, again, if you guys are part of the masterminds, if you've seen my videos before, this is something that I've incorporated into my trading. Although I am not a strict ICT trader, this is a concept that I like to keep an eye out on. And it does usually find some confluence with other indicators like the Fibonacci, etc. You also know that I wait for market structure to break. In this case, the pre-market low was also what I would identify as market structure for this consolidation. And I wait for an impulsive move, and I don't trade the breakout. I usually wait for a retest to solidify that move is actually one that will stick. So we have the fair value gap here. We have the opening price here in orange. We have the pre-market low here. And for shits and giggles, I go out and I will pull a Fibonacci retracement from swing high to swing low as well. And as you can see, we also have the golden pocket midway through this fair value gap here. So this is why I said looking for a retest around 162.45. And that was because it was around halfway of this fair value gap here. And I entered the 155 puts. Now, although we are dealing in the 160s for Tesla, why did I enter the 155 puts? I normally don't go so far out of the money. In this case, this trade was taken on Monday morning. And the expiration for the puts, as it usually is the case with day trades, is the soonest expiration end of the week. So we have all of that extrinsic value or time value left because it is Monday. If it was Thursday or Friday, I would likely trade closer to the money as opposed to going to the 155 put, which is almost $7 to $8 out of the money. So we had the fair value gap, we had the Fibonacci, we had the retest of the opening price. And then this right here, again, if you guys watch the masterminds, this looks like a liquidity wick, right? This looks like a wick into liquidity. And I was expecting to see the price trickle down from here. Now, my stop limit, and again, as you guys know, I don't place stop limits based on the options price. I place a stop limit based on the stock price. And it was above this area right here. I had a stop limit that would have taken me out of the trade. Again, not off of the options price, but off of Tesla's price itself. We bought the 155 puts around here. We got a retest of the opening price, and then we started dropping. Now, as I said, we bought those 155 puts for 102. ended up closing this out at around $1.45. And the reason that I closed it out there was just because we have this confluence of lows here, which is where we close out the put. Now, the put kept going down from there, right? And these puts eventually went to 90% profit. We closed it out for 40. And to me, it's all about realistic targets. I never fret or really lament any profits that I missed, right? Now, you could have gone back in time and drawn out lows that coincide with the lows that we see on the left. But for me, I was really okay with the 40% profits, especially on a trade. This is a Monday before FOMC, so we could see some shenanigans and some volatility that really muddies up the price action. But that is essentially my confluence there. Now, I also put out these rules for trading. This is something that I shared on our mastermind on April 30th. By the way, this was open to the public, and shout out to you guys who signed up. But this is something that we do regularly, multiple times a month. And these were the topics for the mastermind: how to identify which direction the market is going intraday, my favorite strategy, mental tips, how to invest in treasuries, which is a question that I've been getting a lot, especially as yields have been spiking once again. So one of the things that we went over is, for me, what makes an A-plus trade. Feel free to go ahead and screen cap this, because this is my go-to strategy. How to identify liquidity. Then I want to see a market structure shift, and then I want to see a retracement into a point of interest using an array of tools. And I have to make sure that my RR is at least 2-to-1 or better on every single one of my trades. Scalpers will likely lean towards a 1-to-1, but for profitable, successful day trades, for me, I like to lean towards 2-to-1 or better, because that makes your win rate less dire, right? Your win rate doesn't have to be that high if you stick to solid RR trades over time. So again, if you want access to all of our trades and analysis, you want access to the day trades, the swing trades, the scalps, futures, options, stocks, etc., link is in the description below. Come be a part of the monthly in the least. And if you want access to all of our masterminds, which we do multiple calls a month, and you want access to all of the courses, over 60 plus videos of courses explaining how to options trade, how to day trade. And we are releasing a futures course as well. And you get access to all of the future masterminds and all of the future courses basically for free if you sign up for the lifetime membership. Let me know in the comment section if you got something out of this, if you learned something new, or let me know how you like to day trade, whether, you know, part of how I do it is also congruent with how you do it, or if there are ways that I'm not covering here that you find helpful. I would love to hear from you guys. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.